Hey everyone, welcome to this deep dive. We're tackling the global economic outlook.
Yeah.
You guys wanted to know more about it, so you sent us a report from the World Bank Group.
The June 2024 Global Economic Prospects.
Yep, it's their flagship report,
That means it's a pretty dense read.
packed with potential aha moments about where things are headed.
Absolutely. It does offer some valuable insights.
Yeah, and that's why we're here.
To help you navigate
This beast.
Yes.
We'll pull out those key takeaways.
the parts that made us raise an eyebrow.
And most importantly, what it all means for you.
Exactly.
So let's jump right in.
Yeah, let's do it.
The report kicks off with this idea of stabilization,
Uh-huh.
but growth remains subdued.
Right.
What's the story there?
So globally, growth is projected at 2.6% for 2024, and then it's only expected to edge up slightly to 2.7% in both 2025 and 2026.
That doesn't exactly scream economic boom times, does it?
Not really. It's almost half a percentage point lower than the average growth we saw from 2010 to 2019.
Wow.
And get this, that slower pace is going to impact economies that represent over 80% of the global population.
Wow. So that means most of us are going to feel this slowdown in some way.
Yeah.
It's like the entire planet is hitting the brakes.
Compared to what we were used to just a few years ago.
Exactly.
That's a good way to put it.
Yeah, and the picture's even more complex when we zoom in on emerging market and developing economies, or EMDEs.
They're projected to see even slower growth,
Okay.
dropping from 4.2% in 2023 to 4% in 2024.
So while things are sluggish overall, developing economies are facing a steeper uphill climb.
Absolutely.
And I was particularly struck by the report's point about how this is hitting vulnerable economies the hardest.
Yeah.
Over half of fragile and conflict-affected economies will actually be poorer in 2024 than they were before the pandemic.
That's right. It really highlights the uneven impact of global economic trends and underscores the need for targeted support in those regions.
Yeah, okay, so we've got this overall picture of slower growth.
Mm.
But what about inflation? Is it finally easing up?
Well, the report says global inflation is expected to moderate,
Okay.
but it's going to be a slower process than initially anticipated. It's projected to average around 3.5% this year, and one of the key factors contributing to this is something called sticky core inflation, especially in those EMDEs we were just talking about.
Okay, sticky core inflation. That sounds not good. Can you break that down for us? What does that even mean?
Think of it this way. Imagine you're trying to deflate a balloon, but there are certain spots that just refuse to shrink. That's kind of what's happening with prices. Even as other economic indicators stabilize, certain core prices, particularly in services like housing, are staying stubbornly high.
Ah, so it's like this persistent pressure pushing prices up. What are the implications of that? Why should our listener care about sticky inflation?
Well, it means central banks, those institutions that control interest rates, are likely to keep those rates higher for longer. And what does that mean for you? It means borrowing money, whether for a mortgage, a car loan, or even a business loan, is going to remain more expensive for quite some time.
So, no easy relief on that front. All right, so we've got the global picture, but this report also zooms in on specific regions. Let's start with China. They're often seen as a bellwether for the global economy. What's the outlook there?
The report projects growth in China to slow to 4.8% in 2024, which is down from 5.2% in 2023, and they expect this softening to continue in the coming years.
So a slowing giant. What's driving that trend?
Two major factors: the ongoing downturn in the property sector and declining consumer confidence. This property sector slump, which has been going on for 3 years now, is dragging down investment.
Yeah.
Think about it. When people are unsure about the value of their homes, they're less likely to spend on other things.
Right, it's like that ripple effect we talked about earlier.
Exactly.
One sector struggling can send shockwaves through the entire economy, and it sounds like consumer confidence is a big part of that. What's behind that decline?
It's a combination of things.
Okay.
The property market struggles contribute, making people feel less wealthy and less secure about their financial future.
Right.
Then you have global uncertainty and concerns about things like inflation eating into their purchasing power. All of this makes people more hesitant to spend, which further slows down the economy.
So it's a bit of a vicious cycle. Okay, so not a very rosy picture in China, but let's shift gears a bit. The report also emphasizes the importance of investment, particularly in those EMDEs. Why is that so crucial?
Investment, especially in things like infrastructure, education, and healthcare, is really the bedrock of long-term economic growth.
Okay.
And for EMDEs, it's particularly vital for achieving their development goals and addressing critical issues like climate change.
So it's about building a stronger foundation for the future.
Exactly.
But how does investment actually translate into economic growth? What's the mechanism there?
Well, think of it like this. When governments invest in, say, building a new highway, it creates jobs for construction workers, engineers, and all the supporting industries that puts money in people's pockets, which they then spend in their local economies. Plus, that new highway makes it easier and cheaper to transport goods, boosting trade and making businesses more efficient.
So it's like a domino effect, but in a good way.
Yeah.
You get this multiplier effect where one investment triggers a whole cascade of positive economic activity.
Yeah.
And the report highlighted some interesting stats on that, right?
Yes. They found that in EMDEs that have enough fiscal space, meaning they can afford to spend increasing public investment by just 1% of GDP, can actually boost output by up to 1.6% over 5 years.
That's a pretty significant return on investment.
It is.
But you mentioned this fiscal space. Is that a big hurdle for many developing economies?
It can be. Not all countries have the financial flexibility to make these investments without jeopardizing their economic stability.
Yeah.
It requires careful planning, efficient spending, and sometimes tough choices about where to allocate resources. It's like managing your household budget. You have to prioritize needs and make sure you're not overspending.
So it's about making strategic choices that will yield the biggest long-term benefits. Okay, so we've got this sense of a global economy navigating some choppy waters. But what about the bigger picture, the potential risks lurking out there? Does the report address those?
Absolutely, and it's a bit of a mixed bag. The overall outlook remains subdued, with risks tilted to the downside.
Oh.
In other words, there are some potential storm clouds gathering.
Okay, spill what are some of the major risks we should be keeping an eye on?
Well, the report flags several, including escalating geopolitical tensions, persistent inflation that we've already touched on, the potential for further trade fragmentation, weaker than anticipated activity in major economies, and of course, the ever-present threat of climate change-related disasters.
Wow, that's a lot to digest.
Yeah.
I think the takeaway here is that while there are some glimmers of hope, there are also some serious challenges ahead.
Exactly. And it's important to remember that these are just projections based on the information we have today.
Right.
The actual outcomes will depend on how these various forces interact and evolve over time.
Right, it's a reminder that the global economy is dynamic and constantly in flux. So what does all of this mean for our listener? What should they be thinking about as they navigate this complex landscape?
That's a great question. I think one of the key takeaways is that we're living in a time of heightened uncertainty.
Yeah.
Things are changing rapidly.